Yo guys, what's going on? Welcome back to another weekly forecast. And before we get started, we're going to do a quick update on gold. As you may know, that I don't really trade gold as much. I've been sort of making my transition towards futures, which I'm having, a very good success rate on. You'll be able to, find that out from TikTok and from my free channel. I've been posting a lot of updates on Nasdaq on there, but we'll give a quick update, just to keep it, true to the OGs. I guess we've been trading gold for a while. So we might as well just give an update for you guys as well. Right, if we go to the daily time frame, we'll be able to see that this is my sort of invalidation point on gold to switch from price to a sell program into a buy program. Right now, you can see that price ended up closing way above the daily fair value gap. I was expecting price to hold here to potentially push back down. This then becomes an inverted daily fair value gap, which will be a key point of interest here, because price could just keep on climbing and skyrocketing without any major retracements and go up towards the external liquidity that we have above here. You can see at the time here, price ended up pushing down along with FOMC, and then price ended up giving that retracement, and then on Friday, when we sort of broke structure, came back into this sort of inverted fair value gap that we have here, like so. As the inverted fair value gap, price respected that with NFP price skyrocketing and just stayed above here without any sort of bearish drop back down. Yes, I was expecting a potential bearish move off this daily fair value gap, which was marked, is now marked as an inverted fair value gap. However, there wasn't any sort of major liquidity clearance and the price closed below some change in the state at all. It was just more or less like reaccumulation for price to push back up even more. So this is one reason why I didn't get into the sells. I was focusing on Nasdaq anyway. We made decent money, as you can see, probably from my previous video, which has been uploaded. But yeah, nothing showing sells at all. Price then, kept this. I believe that this was a clear market maker buy model. You can see that here with FOMC, you had the original consolidation where price ended up, look at that. Buy side, clear buy side that was left there. A lot of traders tend to overlook this, where you'd have buy side that's there and they'd be like, damn it, the move's gone, right? And it's not going to come back up here. This is engineered on purpose, right? To then say that, right, I'm going to come back in a few days. But a lot of people will then, switch to bearish bias and just completely look for sells, when in fact that it's actually, this was left there and it's indicating to you that price is likely to come back to this level, right? You just need to be patient and say that, right, okay, price may be going away. This is just manipulation, right? Once price clears out some liquidity lows and gives a break of structure, right, and then goes back into an inverted fair value gap for an entry, then you can potentially target this, this original consolidation that we had. This is a clear market maker buy model, right, where price leaves liquidity, moves away from it, and then comes back and takes it and moves higher. This is what I use day in, day out on Nasdaq. It happens on every single market, and it's happening on gold. So if this sell side right here, if I go and look at what liquidity we ended up clearing onto the on the left of it, you can see that we had this 3280 level, and I mentioned this on the groups, saying that 3280 is going to be likely to be cleared first before any sort of reversal. We have another sell side to the left here at 3270, which is what got taken out as well, right? Sell side right there. So then what would you do? You then wait for price to then move out, close above a price swing high, then this level becomes your breaker block, right? You can see the price traded into this breaker block, also had inverted fair value gap and sort of started dancing around here, and then price moved up with NFP. Cleared out this buy side right there, and then has now moved within this inverted fair value gap on the daily. I think that what could happen is on the 4-hour time frame, this is what I'll be looking for. We have a very big expansion with NFP. I don't think price should go back below this NFP low now. I'm thinking that price should either use the inverted fair value gap, pull back down to push higher, or if we get any sort of deeper retracements, you can see that we have these inverted fair value gaps right here. I believe that price should fall back towards this one as an inverted fair value gap, around about 33.30. If price wants to retrace, because this would be classed as a lower low and then high high, this would be another breaker here, like so. There you have a breaker block inside there. So I would be expecting bullish moves to continue, because price is now showing that it's in a buy program. It's cleared out some highs and lows, it's cleared out some bearish PD arrays, and now we should be using these as support for price to push back up. So any sort of pullback within this sort of this big green candle from NFP, I'd be expecting as some support. If the timing is right and everything, price should start pushing up. If price closes back below this inverted fair value gap here, as my point of interest, if price closes below this, right, then you got to be a bit careful, because price could push back lower here from this area here. We don't want price to close below this, because this now should act as support for price to push up. So I'll only be expecting to target buy side liquidity here rather than sell side. So step by step, keep it nice and simple. That's what the market's showing us right now. We've closed above a daily fair value gap, so we potentially could even just pull back a little on Monday and push higher and continue this bullish move. If price starts to do that, all you want to do is look for retracements and then buy the dip and buy dip, buy dip, and then take it back up to this high and this high. Don't expect for price to start saying that now we're going to get a big sell off first and then price is going to go back up. If price is in an uptrend, it can still just move like this, right? That's the exact same thing that happened when price was in a downtrend, right? From this area, look, we didn't get any major liquidity clearance. We were targeting retracements, 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 and then we had like your basic structure there, and then that's when we ended up getting the reversal. So that's what I'm expecting on gold. Let's go and switch over to Nasdaq. Right, beautiful NQ. What's it doing? We're having a big pullback right now at the moment on the high time frame. Yes, price has cleared out the all-time highs. It's now coming back towards this area here. You can see on the left, the December highs. We're now coming back to retest that. For myself, let's just switch over to the monthly time frame. You can see that we have this big monthly fair value gap, right? That's going to be key. It's going to be very key to see if we can enter on these on this retracement here. We have a monthly fair value gap, right? So if I mark out the prior monthly low, this is going to be key to my analysis here. Let's reconnect what's going on. Let me do that again. We have a prior weekly low here. I'm going to change it to PML, which is prior monthly low. So this is a key liquidity level here where price could be drawing towards. Let's zoom in and see where price is at the moment. Here we go. Prior monthly low right there. Now, if price stays within a sell program, meaning if bearish order flow is still present, I believe that price should keep gunning for this prior monthly low as the drawn liquidity, right? If we keep seeing where price pushes down, retest, pushes down, retest, this is where the main target should be. And once price hits here and we get some sort of big high time frame sort of change in structure, then this could start kicking off a sort of reversal where price pulls back and starts pushing back up, or at least retracing. So that's what I'm expecting, this prior monthly low to be the drawn liquidity. So now if we go down to the lower time frames and start having a look at what's going on and what sort of levels I'm going to be watching to sort of support price. So you can see that over here on this current down leg, bearish leg that we're having at the moment, we created a 1 hour fair value gap and we respected it, right, which is right about there. So this 1 hour fair value gap is going to be key in my analysis to keep price from pushing back above this. Then price is still bearish. We have the 14th of July sort of lows here. If price breaks below this on market open, or even if you get a gap on market open which is lower, what you'd likely to expect is price to retrace into that gap and use that as resistance for price to push even lower to continue the bearish order flow. If price breaks back below, say for example we gap below here, we've taken at these lows and price pushes above, then you're likely to see price turn into a shorter time frame market maker buy model where price goes back above to clear out some liquidity here, and then we could potentially even switch and retrace back down. So that's what I'll be looking for going into next week. You want to take them step by step in terms of lower time frame, higher time frame models. If you're following the higher time frame, yes, you can stick on the 4 hour time frame and wait for price to clear out all of these lows here, and then you even have a weekly time frame fair value gap, a monthly time frame fair value gap. So these are very key levels of liquidity where price it could be retracing into for price to push up. If you can see from this, basically this impulse leg from the 20th of June to the high, if you mark that out, price is still above 50%, right? So you can see that on a higher time frame perspective, this is just a mere retracement, right? Where price is pulling back into discount for a potential another move back up, right? So it's a very key time to be, trading Nasdaq. This is just a mere retracement, collecting this liquidity that we've had on this uptrend here. You can see that an uptrend can potentially last like 2 months, where it can continue pushing up and not clear out liquidity. Then we get a big move with FOMC and then a big drop aided by NFP, where price clears out all those lows and then starts, making its second push back up to the highs. So that's what I'm looking for at the moment. Bearish outlook on Nasdaq. At the moment, we have key draws and liquidities that we want price to breach below, especially this current low that we have. Look at that, we're spiking it only. I want to see a clear break where price absolutely clear, goes straight through this and then potentially gives us maybe a midweek reversal or something that we're going to get. I'll keep the VIPs updated day by day, but that's pretty much it on this weekly forecast. Bearish outlook on Nasdaq, bullish on gold. It's been OSFX. Peace out.